Portillo's rallied 15% almost today. George Tsilis taking a look at the overlooked stock for us. I do think it's an overlooked stock, George. I don't know how many people know about Portillo's being publicly traded, but certainly is not overlooked as a delicacy here in Chicago.
Yeah, that's the thing. It's not overlooked if you live in the Chicago metro area. Portillo's obviously is a very popular fast casual and of course quick serve Chicago style restaurant. But the company itself, OJ, has been growing its total unit base outside of Chicago. Based on what I saw in terms of reporting last quarter, they have 61 units in the metro area, but they have total system-wide units now of over 90 stores, and they're actually growing quite considerably. This is based on investor presentations the company's provided in the Sunbelt area. So that includes places or states like Arizona and Texas and Florida. And the company itself also, from an IPO standpoint, a publicly traded standpoint, came out in October 2021. And it's been down, quite a bit since then, a 3-year decline of about 59%. Over the last year, the stock has been down about 23%. But if you look at the chart, a lot of times charts are very telling. In the past month, the stock is actually up about 23%. So it seems to be, catching a bid from the standpoint of maybe some business, updates, and of course the business expansion story behind this particular franchise, which is still quite robust. Now, there was a catalyst as of late. They did provide an update of their fiscal Q4 revenue and EBITDA guidance, even same-store guidance, and this occurred at the ICR conference. And essentially, if you look at last quarter when they reported their Q3 numbers, this is back in November, they missed the revenue estimates, and they actually reduced their same-store sales guidance down to a negative print, and now they've actually flipped that. They actually are seeing positive same-store sales estimates for this quarter at the low point around 3 basis points versus a 0.6% decline that was estimated. And even sales for the quarter, they were actually quite low. The guidance the company provided last when they reported prior to the update was $139 million. They actually updated that to $185 million, as well as EBITDA guidance to over $25 million versus 19.64. So essentially, it looks like they're, obviously providing better guidance for Q4, a little bit more visibility as we move into the new year. But the stock itself is, like I said, performed quite well. Needless to say, in the past 30 days, of about 23%.
Well, they've really focused on growth and trying to expand regionally, too. So it seems like maybe some of that's coming to fruition. They're getting people to eat the Italian beef, which is, I believe, their best seller. But they've got different things in different areas. Like in Texas, they've got like a Texas rendition and stuff.
Yeah, absolutely. So the other thing is about their business is they're catering to obviously the local cuisine taste and preferences that people have. And if you look at the outlook, they haven't changed their guidance for the total system-wide expansion, which is right now, based upon the previous estimates and even the reaffirmed guidance, it's around 12% at the midpoint. So their total system-wide goal is 920 units, 120 of which are going to be essentially takeout only. So standalone takeout, which provides very good operating leverage for businesses because they don't need the additional square footage for tables and so forth. But the company's been essentially growing profitably. I would say if you look at the total sales last year, it was around $710 million, and overall earnings was a positive $26 million. So they're profitable. The challenge is that they've been sacrificing not just top line sales; those have been increasing pretty standard or balance around 10%, but the same store sales have been compromised because of their expansion in new markets haven't really gotten traction yet. So it's one worth watching. Let's just put it in that regard. Perhaps, looking at stocks like this, which can come out of nowhere and start making these major trend reversals, I suggest looking at it perhaps on the next earnings report to see if they actually hit those numbers and then also provide additional upside guidance. And that, again, I believe is going to be coming out in February. So, again, that's something to just keep in mind.
Okay. Well, expecting negatives, then getting positive for sales is a nice improvement and a good first step maybe towards more sustainable growth, because I think they've been perhaps spending more than the market wanted to build out their growth, and the stock's been under pressure for a couple of years now since we've been talking to their leadership too. So maybe it's time to get him back on the horn and have the CEO back in here and talk to him about the latest move here on the numbers. Thanks, George. All right, good eyes, 15%. Nice look for the overlooked stock of the day.